Hello, it's good to be back with you again today for the last time as far as our daily show is concerned, but we have some good news that I'll tell you about in a minute. You won't completely see the back of us. Hello, Mark, how are you today?
I'm very well, thank you, Peter.
I'm delighted to see that you are. It's not such good news on the British High Street. In fact, it's dreadful news. Let's have a look at the Daily Mail. Greed, they say, circling vultures and bleakest day for High Street since the war. That would be the Second World War, about 80 years ago. Daily Mail readers have very long memories. Yes, the bleakest moment on British high streets since the Second World War. What could they be talking about? Well, this is one chap they're talking about, somebody called Philip Green, Sir Philip Green. He's enjoying another day relaxing in Monaco, where his £100 million super yacht is anchored as his empire, which is called Arcadia, teeters on the brink of collapse. And just continuing on the current news thread, this is an interesting phrase that we hear about from time to time. Again, from the Daily Mail. This is not the Morning Star. This is not a communist newspaper. This is the Daily Mail. How private equity fat cats who rub shoulders with A-list celebrities and royalty triggered Debenhams' downfall. Now, Debenhams, of course, is an incredibly well-known retail chain here. And, they've just gone down. So I'd like to ask you, Mark, this phrase, private equity, it sounds very fine and dandy, but some fingers are being pointed today at it. What is it exactly?
Well, in essence, it's very simple. We tend to think of big companies as being listed on the stock market, and traditionally most big companies were listed on the stock market so that they could get access to large amounts of capital, and that's public equity. They are publicly owned. Anyone can buy or sell a share in them.
Right.
But, not all shares are listed on the stock market. Some of them are owned by individuals. For example, the founder of a business might own, for example, all the equity or a big proportion of the equity in a business.
Sure.
And that's very often true with small businesses. But over recent decades, private equity firms have grown up, which are actually big enough to buy a business off the stock market and take it private and run it very, very differently from the way that they would be expected to run it if they were running a listed business.
Okay, so the way they run it differently, you're being very polite about this, but the way they run it differently appears to be entirely in their own incredibly narrow self-interest. Is that right?
Yes, it is. Yes. They talk about unlocking value, which sounds really good. And if you look on the British Venture Capital Association website, they talk about all the great things that they might do, like give the business a new strategy, help it strengthen its brand, etc.
Good stuff.
But in reality, very good stuff. And sometimes those things do happen, but the real formula for making money in private equity is rather different, which is you find a way of extracting you extract money very, very quickly, regardless of what it does to the long-term health of the business. So I think in the case of Debenhams, for example, that you were talking about earlier, I think it was bought for about 600 million.
Yeah, that's right.
And at the time, as you said, it had about 100 million of debt. Yeah. But then they sold off the stores, which immediately gave a big injection of capital, and they also loaded it up with further debt, so that by now it has over 1 billion of debt.
Wow.
So that's if you think of that in terms of cash that you could extract if you're a private equity player, you could straight away extract the value of the properties that you've just sold off. And secondly, you could extract the extra bit of debt. So they have been able to take out 1.2 billion, which is double their money. That's what they look to do, to double their money fairly quickly. And once they've done that, it doesn't really matter too much what happens to the business. So they've got it's worked for them. So the fact that the business now collapses is not a big deal. And in
so
fact,
this is what they're talking about when the Daily Mail, for example, refers to circling vultures. They're talking about exactly those people, the vulture mentality. I've got a quote here from the former chair of Debenhams, which is part of the collapse of Arcadia. It's not owned by Arcadia, but they're very closely linked. And he says there was a salvageable business in there, but we could not get to it from where we were. And then I've got another quote here, again from Daily Mail, very useful newspaper. Richard Hyman, veteran retail analyst, says Debenhams basically just needed lots and lots of money to invest in changing times and circumstances. He said, but the money was removed into the bank accounts of private equity investors. He says that is the truth of it. This is bleak stuff. I seem to remember years ago, these people were called something rather ruder than private equity. They were called, what was it, asset strippers. Is that basically the same thing?
Well, it is basically the same thing, but I think, to be honest, that today's private equity firms have perfected the ability to extract value from a business, and they've gone further than the traditional asset strippers used to. So, for example, with pension fund surpluses, if you buy a business and it's got a big surplus in the pension fund, you're not allowed literally to plunder the pension fund, but you can stop making any contributions. And a responsible business owner probably wouldn't completely stop because stock market valuations go up and down, and therefore pension fund surpluses can go up and down. You would probably want to leave a bit of a surplus, but they would basically run the surplus down, and quite often the net result is that they're left with a deficit. So when Arcadia, which is also just collapsing now, that one has a significant pension fund deficit, which has been accumulated over the period of Philip Green's ownership. The same thing happened. He had exactly the same story, really, with British Home Stores, which he owned, which was his first really big purchase. And that one was left again with an enormous pension fund deficit, which he did partly plug. I think he put back in about 360 odd million.
I think he was embarrassed to do that, wasn't it? Because there was a symbolic vote in Parliament to actually take his knighthood away. I mean, Parliament can't do that, but I think he was possibly embarrassed.
Well, I think there was an awful lot of public pressure on him, not just to walk away. And, legally, there is a pension fund regulator which is meant to look after the interests of pension funds and make sure that the sponsoring company doesn't behave irresponsibly with respect to the owners. And I guess there would have been a big risk of some kind of detailed investigation as to how it got into this situation. And I believe that there's also talk of the Green family putting money back in to help with the pension fund for Arcadia. But whether they'll be putting in 100 pence in the pound for the deficit is another matter. Whether they'll simply reduce the scale of the deficit.
Yeah, a little quote here from the Financial Times about how he did it. Always very interested to know about how your billionaire does it. And he borrowed 850 million quid to buy things, raise profits, refinanced his debt, and generated 1.2 billion dividend for his wife. It's not bad going.
Yes, exactly.
Not bad going.
So his wife has for a long time been resident in Monaco, which is a very low tax jurisdiction, and she is the notional owner of a good proportion of what most people regard as his empire, but she actually is the tax beneficial owner.
Well, maybe
of it.
he'll sell his yacht. Maybe he'll sell his yacht and put some of that money into the pension fund. I mean, it's these private equity vampires. And again, this is the Daily Mail. It's not some some weird left wing, revolutionary right. It's the Daily Mail. They're calling these companies vampire funds, and the more high street brands, Pizza Express, extremely well known here in the UK, Prezzo. They all appear to be on the brink, and apparently private equity firms are looking for public money to bail them out. It's a very sorry state of affairs, really. Is this what capitalism was supposed to be about?
Well, no, I really don't think it is. The public equity model is far from perfect, but listed companies come under a great deal more scrutiny, and they tend not to behave in general quite so badly. It's very rare to have a major issue with pension fund going massively into deficit and the business collapsing with publicly owned companies. And this whole idea of leveraging them up so far that they have no resilience.
It's a vampire. It's a vampire, isn't it? I mean, if you see sort of cash really as being the lifeblood of a business, I mean, what they're doing is they're extracting as much of that blood as they can into their own pockets, and they're leaving just a sucked out empty hull that cannot survive in especially in today's highly competitive high street environment.
Well, yes, that's right. The point is they've taken so much money out that they don't really care whether it survives or not. Of course, they would prefer if it really thrived, as long as they don't have to put any money into it to make it thrive. But if it doesn't, it's essentially no skin off their nose. And that's another difference, that with public companies, if the company borrows, the whole company is on the hook. But with private equity companies, they're very clever. They do something called borrowing without recourse. So what that means is that one of their businesses in their portfolio might borrow some money, and if that business goes bankrupt, the bank can't come to them and say, yeah, but CVC or Blackstone or whoever it is, you're an enormously rich company. How about honouring that debt? Which is what would happen typically in the public model. You wouldn't get Marks and Spencer borrowing at the store level, and then one store goes bankrupt, and the parent company says, well, you lent it to our Tunbridge Wells store, you didn't lend it to us, and I'm afraid we're not paying you back. But that's effectively what happens with the private equity model. So they have, over the years, they have honed a whole variety of techniques which enable them to extract money, which mean they don't have to pay. They also don't tend to pay taxes because for a whole variety of reasons, one of which is that they load them so much up with debt that they don't really have any profit left to pay tax on. So it's a very well-honed model. It works very well from the point of view of the owners. It doesn't work well from the point of view of suppliers who get left out of pocket when these businesses go bankrupt. It doesn't work well from the point of view of employees who lose their jobs. It doesn't work well from the point of view of employees who might not get their full pension. And it doesn't work well from the point of view of the rest of society, who suddenly has, in some of these cases, 13,000 employees are suddenly going to be thrown onto the unemployment register.
Well, we're talking in the UK, we're talking about 25,000 in total at the moment, which I think in years gone by would have triggered massive government action, possibly even the fall of government, if it hadn't taken steps to protect jobs like that. But it's just one more statistic today. I'm wondering what this is a funny old world we're living in now, really. I mean, it just seems as if greed has gone completely through the ceiling, and I'm wondering what can be done to stop a small number of, well, you've got to say highly influential people like this, because they are the friends of not just celebrities, but they are the friends and patrons of our politicians as well, in the UK, US, obviously. What can be done to curb their very, very narrow interests that work against the interests of the 99%? What can we do?
Well, it's actually, I think, even more than 99% of people who are outside that little circle. It's more like 99.99% of us are not in that category. Which is basically almost all of us. So I think the first thing is we need to realize, first of all, what's going on, and secondly, how many of us there are. When you put those two things together, then it becomes very possible to start taking action. At the moment, we, as a group, we don't understand what's going on because people don't normally spell these things out. No. And as you say, it's a little bit unusual to see something like that in the Daily Mail. But actually very helpful because they've got a big circulation and this is a big issue. And if people start to realize, well, hang on, what is this enormous private equity sector doing? And of course, not every private equity firm behaves in the same way. That's a hedge fund, which is slightly different. But we'll maybe talk about them another time.
Yeah, he looks an interesting character, doesn't he?
He is a very interesting character. It's probably worth a program on his own.
All right. Let's do that.
Yeah. But yes, absolutely. There are different forms of private equity, and there are some private equity firms that are trying to run an ethical business. But what I've described is a pattern which has been repeated many times by many private equity firms, and it just is not good for society. So there is urgent reform needed.
Yes, there is indeed. And there's got to be a will for reform. And before that comes knowledge, of course, some of which is in Mark's book here, actually. I mean, you do touch on private equities towards the end, don't you?
Yes, and in fact, we talked about the bankruptcy of British home stores, which is something that had happened at the time, already by the time the book was being written. So it is in there in a bit of detail. So if anybody wants to understand in a little bit more detail how these things work, it's almost the same in these two recent cases as it was in the British home stores case. If you read the book, you'll understand exactly what's going on in these other two cases.
Fantastic. That's great, Mark. Thank you very much indeed. I've got some news for you. We've done our monthly run now, actually, and hopefully you haven't been completely fed up of being with us every day. We will be with you once a week, starting tomorrow, Saturday, and every Saturday thereafter for an indefined period of time. The next 6 months is going to be with you, talking about issues in the news and hopefully spreading a little bit of information, possibly even bring a smile to your lips as well. In the meantime, I leave you with Mark's book, 99%. You can buy it on this link here. If you want to send Mark a question or a comment, please do so right here on YouTube, and we'll see you tomorrow and every week afterwards.